Entrepreneurship, Chapter 14, Navigating Legal and IP Issues. Legal considerations. Startup legal costs vary. Identify legal counsel you'll need. United States Patent and Trademark Office. So when people are looking at starting up a business, depending upon which type of business you're looking at, all of them are going to have some legal consequences and costs associated with. Depending on which type of business you engage in, it's going to determine the level of legal costs you're going to vary, that you're going to incur. You should always try to have someone identify legal counsel you need. There's a business out there that a lot of people have used to set up their business and stuff called LegalZoom to help set up small businesses and stuff. But you need somebody or some type of legal entity to help set up a business. And one of the things that people, depending upon what business they engage in, they'll need to get familiar with the U.S. Patent and Trademark Office. And we'll talk more about that later in the chapter about patents and trademarks. When you look at legal considerations, one of the things that you can do too, the Small Business Administration, I forgot what year it was, that set up this organization called SCORE. It's called the Senior, and SCORE is an acronym for the Senior Corps of Retired Executives. These are retired executives from various industries that work under the SBA SCORE, and they do it for free. They help people set up small businesses. They help people make their businesses better, and they give all this legal advice and expert advice for free. So this is set up again by the SBA, Small Business Administration, but anybody considering going into a small business should definitely reach out. And they have chapters throughout the country in all major cities. So they're very easy to find. Founders agreement. A founders agreement is something that you have is when you have multiple people who are involved in the business and you come up with a founders agreement between you all. Let's say if 4 people involved, you have an agreement between you 4 as to on all the key issues pertaining to the business, so that there's to be no misunderstanding. And vetting your co-founders. You want to make sure that you're vetting the co-founders and stuff to vesting the co-founders. So this comes when it comes to the equity within the organization, how things may be divvied up or whatever. If you have multiple people involved, you want to start out from the jump knowing, let's say for instance, if I had the lion's share and I had 50% of the business and 3 other people split the other 50. Well, we need to know that up front. And so that needs to be in writing. Types of legal structures. Business affected by legal structure and paying for legal consultation. You have to know what type of business you're actually trying to set up. If you know what type of business you're trying to set up, then you need to set the business structure up, the appropriate business structure up for that business. You just don't say, well, I'm gonna start a business and I'm gonna set it up this way. No, you have to make sure that you set it up the proper way. And again, that's gonna be get some legal advice. So paying for legal consultation or speaking with professionals is definitely trying to save you some headaches down the road. So we're gonna look at some different types of structures. So a sole proprietor. This is when you have someone who's by themselves, own business owned by themselves. They own 100% of it. They call all the shots. And they're personally exposed to all liability, meaning all the profit comes to them, all the losses goes to them. Everything is done by them. So there can be no issues really when there's only one person involved in the business. And that right there, one person who's legally responsible for it, makes it fairly easy. And this is what you can find with some small startups initially. A general partnership is when you have a business and you got 2 or more people involved. Okay, now you're just gonna step it up, get a little bit more complex. It's just a little bit more. And this is when you have profits for this right here. So if it's 5 people involved who are owners and stuff, general partnership, then profits reported on all 5 people's tax returns. You have to have a formal agreement between the partners. Again, who does what, what are the expectations, what are the roles, the works. And all 5 partners are liable for the business. A C corporation. So this is a separate legal entity. This is based, I want you to think in terms, when I say a separate legal entity, think of the business as a person. That's what legal entity means. It's like it's a person in itself. The corporation is legally liable. So if I'm suing you and you have a C corporation, I'm not suing you, I'm suing a corporation. The investment is mostly shareholders. And so this is people bring their own money in to shareholders. Now understand, they make this investment, they can make money, but they can also lose it too. And what you have is transferable ownership. If someone decides that, you know what, I'm not really feeling this business anymore, I'm going to transfer my ownership to someone else, I can do that. And in this type of C corporation. So in other words, a C corporation has a continuous existence. So it survives all of the owners. So to passing their ownership, it goes, let's say that all 5 owners eventually die, but before each of them die, they pass their portion over to someone else. Well, the corporation continues to go on. The corporation is not hard to set up either. It's fairly easier than what most people think. I'll be honest with you, the hardest part usually comes after you set it up, is trying to find out all the licensing and all the fees and stuff you need to pay to the federal, state, and local governments. Profits are often paid to the owners in these C corporations. And again, their tax is calculated separately. So if you got this is taxed as an entity, as a person, not through your income taxes as an individual. S corporation. S corporation is also eligible for separate taxation. You can have no more than 100 shareholders. You can have shares, but no more than that. The income is passed through the organization and it goes to the shareholders. And this is how they get compensated. Corporations lose money in short term. So when you have these types of corporations, they can lose money in the short term, which means there will be no profits initially and stuff. But when they do turn around and start having profits, then that comes through the corporation. It goes to the shareholders that in that capacity. LLC, a taxation of limited partnership, taxation partnership liability benefits of corporation. Profits and losses reported by the individual. So an LLC, when they think in terms of LLC, this is what I have in my personal business is an LLC. So with this type of, the profits and losses are reported by the individual. So you have profits and losses that when it comes time to file the income taxes at the end of the year. So if you have someone who actually is making money working and they have an LLC and stuff, then all that will get filed together. You have ownership agreements advisable if you have more than one person involved in the organization, to make sure that you keep down the commotion and confusion about anything that could transpire. Types of legal structures: limited partnership and limited liability. So we look at limited partnership, it's passed through the tax entity. And you look at the limited liability partnership, it gets it's a form of limited liability. So in other words, when you look at in terms of that, if you're looking at protection from the business endeavor, the LLP, the limited liability partnership, is going to be the one that will give you that. The LP, the limited partnership, is where it's passed through the tax entity. This goes through the business as well. But the difference is the LLP will actually give you a little bit of cover when it comes to liability. Benefit corporation. So when you have a benefit corporation, these things have to meet government standards and strict standards for performance. They have to be certified, and they have to have strict standards for social and some type of environmental performance. Ensures that, and the government will actually have documents they'll have to do, and these companies must ensure that they fulfill their social mission, whatever it may be. And the purpose has to be a social benefit. That's their goals, is actually to try to do that. And they balance between profit and social benefit. So it's kind of like a hybrid. It's kind of like a private industry / nonprofit in that sense. Here we're talking about the nonprofit. Exempt, they don't pay income taxes. The reason they don't pay income taxes, this is something that Congress determined that it was a socially organization that was designed for the sole purposes of providing some type of social benefit. So some of these profits can be benefits and stuff in way of when it comes to things that some profits can be receive benefits, such as employees getting things or whatever else through benefits. There is no earnings can be no earnings can be benefit individuals. So the earnings goes back into the organization. Now, people get paid salaries to do their work, but the profits go back into the business. That's the term nonprofit. That's where it comes from. So normally when you see these people who set these nonprofits up, they're usually setting them up for something, some type of social need or some type of a community need, or to help a group of people, or to help the community and environment in some kind of way. Legal mistakes made by startups. Mistakes are common. People make a lot of mistakes when it comes to getting startups, because sometimes a lot associate with not doing their homework, not doing the due diligence, operating off emotions and what you think versus how things really are. Professional guidance is critical. You can always find somebody who's willing to tell you the things you want to hear, but you have to find the people that tells you the things you need to hear. And sometimes that can be a tough pill to swallow. So sometimes people don't do that. You have to choose the right business structure. Did you set up a business structure that's conducive to the type of business that you are actually trying to do? For instance, if you're trying to run a manufacturing organization, did you set up a structure for a marketing organization? If you did, that's a conflict and that's a problem, and you will not be able to function as you should as an efficient business because you've got the wrong business structure. Formal agreement between co-founders. You have to have these agreements, because if it's something that's relatively small and you guys start out, that's one thing. But what if it blows up and it becomes a very successful business? Now it's going to grow and it's going to bring in all types of things to include growth, people, probably assets, all types of things. Stock. This is why you have to have formal agreements. It's really to protect you for the long term and reduce the confusion. Intellectual property. Intangible property created by humans. So when we think about in terms of intellectual property, we're thinking about things like ideas, inventions, slogans, logos, processes. And these things all have rights. When you look at that, when you create, they all have legal protection. They have rights. And intellectual property is essential to business survival. If you have intellectual property and it's not protected, and your business is basically is built upon that stuff, you won't survive. So intellectual property, I refer to it as IP from this point forward. IP is valuable for startups. Depending upon what you have, and there are some people, that see this, and this is when they're willing to make investments in companies based upon that. This can be a little complicated, because let's say that, if it's one thing, if you're a sole proprietor and you come up with something, got some intellectual property, that's one thing. But what if it's 6 of you all? And now you got this intellectual property. Well, who actually owns it? If you're starting a business, who owns that? Does it belong to a certain individual? Does it belong to the corporation? What? And this is why you have to seek legal advice to try to determine, how do we start this business if everybody's bringing something to the table, but somebody brings something more than others. So we've got 4 types of IP. So we look at copyright for creative works. So this is looking at things such as literature, music, and drama, art, motion pictures, sounds, recordings. Trademark, you're looking at the trademarks, and the trademarks, when you're talking about things like names and symbols, like some famous people trademark their name so that others cannot make money off of it. And then when you look at trade secrets is things that you've developed in the course of doing your business, how you do about processes and things along those lines that helps you. Or like someone says, if it's a secret sauce that someone's made for something, these are trade secrets. And then you got patents for inventions. If you're inventing things, you have to have patents on those. And those patents will give you protection on that, so no one else can steal your idea for a certain amount of time. It's so many years that when a patent goes into effect that nobody else can duplicate that. Then after that patent expires and stuff, then it can actually be mass marketed by other individuals. An NDA, non-disclosure agreement. You know, this is something that may be a good idea to have at the very beginning. This is to keep things confidential. This is how intellectual property is protected. You know, now you can have some people. This is not, it can be a legal document stuff, but it may not be a reason. It may not be a binding document that you can compel somebody to sign it. So some people may not sign one. But as you think in terms of that, what it is you do and what you have, you may determine, particularly if you're dealing with intellectual property or trade secrets or something like that, that that is unique to what you figured out and what you do. It may be essential, something that you can use. Now, this is something that's growing and this is getting really big now. Global intellectual property theft. So we live in a global society now, regardless what anybody thinks. This is a global society. We're all connected. So you have crimes that's being committed in the U.S., but they're being committed by folks outside of the U.S. and vice versa. So this IP theft stuff costs anywhere from $200 million to $225 to $600 billion a year globally. IP rights are territorial. So if you have intellectual property rights in the U.S., they may not be applicable in other countries. So now you've got to look at that and take that into consideration. So when you research and look at the IP laws in other countries, say for instance, you're going to grow your business and you want to do business in other countries, then you need to figure out what the IP laws in those other countries are and figure out how you can protect yourself. Do not rely on a U.S. patent to work for you in a foreign country. Common IP traps, publicly disclosing your invention. In some countries, if you publicly disclose your invention, whether it's intentional or by mistake or accident, it doesn't matter. At that point in time, you would not be able to even get a patent for it in that country because it's known to the public. And this is a vital mistake that you do not want to make, because that can keep you from actually being able to do things in certain countries. Failure to protect. So you have to understand when you're trying to protect, you do this to get these types of protections in this country and other countries because you want to protect your product. You have to understand what these laws are in these other countries and understand what the processes are. And even if it means hiring an attorney or somebody legal in these countries to handle stuff for you, then that's what you have to do. Inability to determine originality. So if you take somebody's idea and make it better and you want to grow with that intellectual property, well, guess what? It has to be some type of significant improvement over that and stuff. Otherwise, the people who originally came up with stuff can actually say, you know what, this is my idea, my concept, and he's just piggybacking on it. So you have to make sure you understand how to do that. You need to assign ownership. Who owns the intellectual property? If it's 5 of you, do 5 of you own it? Or do 1 of you own it? Do 2 of you own it? You have to make sure. And again, in these global markets, you got to do your due diligence in these global countries and these other countries to make sure that you are protected when you're dealing in foreign markets. Hiring employees. So when you're hiring employees, you're doing more than just selecting candidates. You got to find the best person for the job, but most importantly, once you get them on the job, now you have to abide by federal and state labor laws. And this is your HR department where it comes in right here, or some HR advisor. EEO. So when you're looking at the EEO, this is law, federal laws that protects against discrimination. So you can't discriminate. So if you have a business and you're hiring people, you can't discriminate against them because they're disabled. You can't discriminate against them based on their sex, race, creed, color, religion, sexual orientation, none of those things. When you're actually hiring and you have a business, you have to abide by federal and state laws when it comes to that. And you can have requirements for a job. It says, give you an example. The job says that, okay, to do this job, you have to be able to lift 25 pounds or something like that because they're constantly lifting something. Okay, that means somebody can't do that, can't lift that, they can't do that job. So they can't say that, hey, you're discriminating against me because I want that job. No, this job, the job requirements are listed, so you're protected from those kind of things. But you, in order to not run into legal issues and stuff, this is where you work with HR professionals. If you have a small business, then you can have somebody that you refer to as an HR professional you can consult with. All businesses in the U.S. have to have an EIN, employer identification number. And this is before you get up and running. Even if you're just a sole proprietor, you have to have that because you have to use it to file your federal taxes. So you see on the IRS docs and the federal taxes. Once you hire new employees, I think it's requirements that within 20 days you must report that information, not only to the federal, but you also must report it to the state as well, that you have hired these individuals. And if you have a business, you have to pay into unemployment workers' compensation, paying unemployment compensation taxes. All businesses will have to do that, and you will have to pay this through your state's labor department. And it's based on the income that people make, but you're required to pay those. Workers' compensation may be applicable too if you have individuals where they've been injured on the job. You have to withhold taxes. All hiring businesses, organizations have to withhold federal taxes and keep records. You have to report these wages and taxes every year. And these are the kind of things that you just can't get wrong because you have to do those every year. So you put things in place. And you have to have what I've seen with small businesses that don't have departments, HR departments and things like that. What they do is they contract with somebody to handle that for them, external business, usually a small business owner that does something like that. Employee forms. So you have to set up personnel files. So when you look at the W-2s and stuff, and this is when you were talking about W-4, forms. This is withholding taxes from people's salary. The I-9 goes to show that someone is a legal resident of the U.S. to work here. Shows that someone's legal. And the 940, is federal unemployment. So when you have people that may go on unemployment and stuff, you have to file documents there. So you have to decide if you're going to have employee benefits. And if you are, this is where you're going to actually incur some expenses on your part, but also the employees. Laws require Social Security taxes, so that's not an option. They have to pay into Social Security if they work for you. You have to deduct it out of their check, and that goes to the federal government. Family medical leave, health insurance, that's another perk. Are you offering that benefit to employees? And then you have other benefits, like dental, healthcare, all these other things that you have to consider. Do you want to offer as an employer? Safety. You're required to maintain a safe environment. So when employees are working there, whether they're working, they're training, or whatever it may be, your facility, if you have a business and a premises, it must be safe for them to work there. And if they're injured as a result of negligence on your part, then that comes with consequences. Not only from the federal government, possibly the state, but also employee may sue you. You have to have provisions for injured employees. Somebody does get injured at work, you have to set up provisions for them to be able to come back, reasonable accommodations. Payroll is maintaining payroll records, who gets paid, what, when, and how much. File tax returns on time. And the cutoff date in the United States is April 15th of every year. You must have tax returns filed by then. Keep employees informed of changes in taxes that could affect their pay. Bottom line is with their benefits or pay, whatever it may be, but definitely taxes. Know the federal reporting requirements. Know when you're supposed to report things to the federal government. Have somebody that you can go to that can make those kind of decisions. Hiring a contractor or an employee. Independent contractors save money. Why? Because they are not employees, so you don't pay them benefits. They get paid usually like a rate for hours. So you may say, I pay him $30 an hour is what I pay, but I don't pay any benefits for him. whatsoever. And as a result, you're gonna give this a 1099 form, and that's what you'll pay him with. And he will be responsible for paying his own taxes, not you, because he's a contractor. Legal consequences of misclassifying contractors. If you actually have employees and you're classifying them as contractors so you don't have to pay benefits, those are things that can get you into legal trouble. When I say legal trouble, you're talking about fines, but you're even talking about potentially prison for those types of things. Amount of control over employer has over work. An employer has all types of control over work because an employer can dictate when people come and go, when they clock in, when they clock out. So the amount of control that the employer has is very significant. Compensate employees. You have to document how you're going to compensate the employees. Are you giving them a salary? Are you paying them by the hour? Is it a salary plus commission? There are bonuses involved. Compensation in form of equity. So when you think in terms of that, are they getting stock for that? So there's multiple ways that people can be compensated. And when it comes to internships, those are covered too by the federal government and labor. When it comes to labor, federal and state labor and stuff. So you have unpaid internships and you have paid internships. But for those unpaid internships, there's certain criteria that must be met. And if you meet that criteria, then you can have these kids come in, and that means usually like they'll come in to work for college credit for their education. And that's why, so they're not being compensated, but they are getting school credit. And those types of programs are very prominent with corporate America and with the federal government. That concludes chapter 14.